Hello investors and traders, welcome back to the new video. सबके मन में यही ख्याल आता है कि which are those fastest growing companies in India, which are generally growing much better than the renowned or the large cap companies. So you can find many companies if you see the NSE and the BSE listings. So there are a lot of companies which are there which are growing fast, but those companies which are beating the nifty benchmarks, okay, so those are the ones which you should focus on. This particular video, what we are going to go about is looking at the fastest growing top 10 fastest growing companies in India. So that is the main discussion point here. This is not a recommendation to buy any shares in these companies. This is just to understand what these companies are, what they are doing, and what is how the business model is helping them grow faster than competitors, grow faster than even the large cap companies, and how they have identified a niche segment which they are operating, and how they are able to maintain their margins, protect their margins, and thereby increasing their profitability and also the sales growth. So the first company which we are looking at here is Trend Company. The Trend Limited market cap is around 1,89,000 crores, and it is currently quoting at 5,300. The only point which I want to make in these companies that these are the high growth companies where the sales growth, at the top line growth, where we are currently focusing on, is more than 25%, 20-25% higher, more than 25% sales growth. So those are the companies which have been filtered out in this top 10 fastest growing companies of India. So the price to earning ratio will be very high. So this is a disclaimer which is where there is no recommendation in this video to buy or sell any of these shares. This is just to go through which are those companies which are growing fast. So that is the basic idea here. So if you see the Trend Limited ROCE is around 23.8. And what is it engaged in? Trend is it's an apparel retailer. So what is an apparel retailer? They are totally focused on the apparel and the allied goods. So they have different stores from which they are selling their apparel. How they have identified the strategy or how the business model has been designed is that they have identified customer segments, and those customer segments, they have stores which are catering to that customer segment, which is into fashion category, where the youngsters are more interested in buying the latest trends. So Zudio is the concept which they have identified, and the stores have been opened where Zudio is storing the apparel, where the fashion is continuously changing. So fashion trends, so if the trends in the fashion are changing, and they are only storing those clothes which are top in fashion, and they manufacture in very large quantities, and hence they are able to sell at below 1,000 rupees. So Zudio is one store. Westside is another store where they are catering to a segment of customers which are little higher middle class. So the prices of those products are also higher than Zudio. So, and they have also have Zara. They have also have Star Bazaar, which is a grocery retailer. So Trend is currently engaged in retailing of apparel, footwear, accessories, toys, games, food, grocery, and non-food items through various retail chains. So the business model of Trend is that they don't operate from very high premium areas. Their stores are into areas where the cost is low, the rental cost is low, so they are able to maintain their margins. They don't do any advertising of their product. There is no online store where you can buy the Trend products. So their business model is totally unique as compared to the company's business model. Their business model is totally different, and that is how they are operating. So if you see the Trend, this is the chart of Trend, where you see here how the Trend price has grown from to up to 5,300 now. So this is just a general trend in share price which is given here, and which reflects the underlying fundamentals. There could be very high expectation built into this Trend price. So hence you exercise caution. What are the pros? The companies, they have reduced the debt. It is expected to give good quarter. So last quarter was very good, which will come to that later on. It has given a good profit growth of 56% CAGR in the last 5 years. It's an extremely high growth company. It's maintaining high dividend payout of 27%, and its working capital requirements have reduced from 39 days to 28 days. And what are the cons? It is trading at very high book value, 46 times book value. Earnings, last quarter earnings, if you see the March quarter earnings, they have income of 989 crores due to some accounting changes which they have done. So there is a very high spike in March quarter in the income, so that you have to consider while doing the forecast of trend earnings in future. Cost of borrowing is high. So if you see the what are the various competitors for Trent, the biggest competitor for Trent is like say Avenue Supermarts, which is Radhakishan Damani owned DMart stores. Then we have Vedant Fashions, we have Red Tape, which is more into footwear segment, which is also doing pretty well. And then we have Electronic Smart, etc. So there are these are the competitors. But if you see the market cap wise, the only biggest competitor for Trent is Avenue Supermarts, which is around 3 lakh crores market cap. Sales, if you see the quarterly sales, March sales 3,298 crores. Compared to that, if you see December sales 3,467 crores, and if you see the profits, if you see the March quarter profit 712 crores versus 371 crores of December. So the quarter on quarter it has shown very high growth. And if you see the year on year profit growth is this 45 here, 45 against 45 crores, you have showing 712 crores. See the amount of jump here. Of course, this jump has a little bit of component which is due to the accounting changes. So you have to understand and then accordingly look at these numbers. If you see here, this is the profit and loss for the sales. So 12,375 the March year ending sales, 12,000, whereas last year it was 8,000. From 8,000 to 12,000 is a high growth company. And if you see the profit, net profit from 394 to 1477. So see the jump in profit. In March 22, the profit was 35 crores, then 394 crores, around 10 times profit jump, and then from there to 1477 crores. So extremely high growth company. Compounded sales growth, if you see the last 10 years is 18, but last 3 years 68%, scorching pace. Okay, and then the compounded profit growth last year's 101% profit growth. So that is how, and if you see the return on equity last year's 15, so current last year is 27%. This is the balance sheet of Trent Limited, which is 36 crores of equity capital. And then if you see here, there are total liabilities here, everything is mentioned here. Cash flows, cash from operating activities 134. Now if you see here, cash generated is 595, from there to direct 1,349 crores. Very high, very good parameter to look at. Very high cash generating company. Debtor days is only 2. Okay, so this is the beauty of it. There are normally debtor days are around 30 days, 40, 45 days. Here only 2 days debtor days. ROC is around 24%, and promoters holding is 37%, Tata Sons, and FIs is 26.81, DIs is holding around 13.89%, and the public is holding at around 22.29%. So overall, considering the business model that Trent is following, this company will do well in future. That is what the expectations are, and this can be looked as one of the fastest growing companies in India. Going to the next one, the next company is Polycab India Limited. It is a leading manufacturer of cables and wires and allied products such as UPVC conduits, lugs and gland, and a range of cables and wires. Practically, they are into cables and wires and into the power segment. Market cap 1,08,000 crores, and current price is 7,220. Very high PE. The stock PE, if you see here, 60. Book value is 545. So here also the price is very high. What ROC is 32%, ROE is 24%. This is not a recommendation to buy Polycab at all. We just wanted to discuss high value, highly growing, very high growth companies. If you see here, what is the dip here? There was an income tax raid. Okay, and that's the reason from 5,678 it fell, crashed directly to 3,800. There was an income tax raid where there was some cash transaction which they were not showing in the books of accounts. The price fell here 3878, but if you see from 3878 continuously the price is going up. It already crossed the previous high of 5,600 over here, which shows an extremely bullish sign, and after that also it has gone up to 7,200. So it shows a very good chart. Company is almost debt free. What are the pros? Company debt free, it has delivered profit growth 29% in last 5 years. Its stock is trading 13.3 times book value. It is extremely high price stock. So accordingly, you have to consider before buying. So in the sector cables, industry cables, power, it is the topmost company, 1,08,000 crore. The next competitor is KEA Industries, extremely good company, that is 41,000 crores. And if you see the profits here, sales growth is 29%, very high growth, ROC 32%. So that is the Polycab sales. If you see the March quarter, 5,592 as against 4,340, extremely high growth compared to quarter on quarter growth. Top line growth is very high. If you see the net profits, 553 crores against 417 crores, very good profitability. EPS is around 36. Okay, yearly profit, yearly sales 18,000 crores yearly sale, which are compared to 14,000 of last year, 18,000 crores worth of sales. Net profit is around 1,803 crores. Very good growth. Compounded sales growth, if you see here, last 3 years 27%, last 5 years 18%. So over the last few years, the profitability, the sales growth is going up. Compounded profit growth last 3 years 27%, very good. Equity capital is 150 crores, and if you this is the balance sheet, cash flows from operating activities, very good parameter. Look at 1,428 last year, this year 1,296 is cash from operating activities, very good. Then debtor days little bit 32, from 30 to 41, it is gone up a little bit, but manageable. Shareholding pattern, if you see, promoters are holding 65%, FIIs are having around 11.96%. That there is a dip in FIIs from 13.41 to 11.96, primarily because of that income tax rate which happened, and then some FIIs book profit and they just exited the stock. DIs also have brought down their stake. However, the price has gone up, and the public shareholding is to around 15.5%. Extremely high growth company, Polycab. Next, we are looking at very high growth company which is known as PG Electroplast Limited, which is currently quoting at 3,290. Market cap is 8,585 crores. The stock P here also is high because it's a high growth company. 319 is the book value. If you see the ROC is at 18.7, ROE is about 18.8. It's a flagship company of PG Group, and they have started the journey in 1977. It's a leading diversified company which is into televisions, manufacturing, and washing machine, etc. So it is in the market parlance, they say it's a mini Dixon in the making, because the Dixon's market cap is around 70,000 crores, whereas this is 8,500 crores. Extremely high growth company. If you see the 1 year chart of this company, it made a low of around 1,500, but now currently it is at around 3,300. Very good, well managed company. What are the pros? Company has reduced debt, and what are the cons? It is 8 point times book. So it basically expensive valuation is the only cons here. Then what are the competitors? PG Electroplast. If you see the Amber Enterprises is one of its competitors, which is 13,700 crore market cap. Keynes Technology is 25,000. That is also a good, very good company, high growth company. If you see the quarterly results, they're very interesting. 1,077 was the quarterly sales as compared to December 530, doubles. It has almost doubled in March quarter. So very good sign here. Operating profit from 42 crores to 116 crores. Extremely good numbers. 26 to 91 profit before tax, and net profit is from 19 to 70 crores. Extremely very good performance in March quarter. EPS is around 26%. So looking at these numbers, it looks like it is the company is doing pretty well. In the March quarter, they have done very well compared to last March quarter, from 76 operating profit 76 to 116. So very good numbers. Overall, on the yearly basis, the profits, the sales is 2,700 crores, and the profit, net profit is around 135 crores, which has grown. If you see here, from loss to 12 crores in 2021 to 37 crores in 22 to 77 crores and 135 crores. So it has almost doubled its profit in compared to the last year. 57% last 3 years. If you see the compounded sales growth, very good number. 124% is profit growth. Extremely impressive fundamentals of PG Electroplast. Equity capital around 26 crores, and this is, they have announced a stock split 10:1. So that is another point which to be noted. If you see, one of the important thing is cash from operating activities from 46 to 186, extremely good numbers. from 46 to 106. 186 is the cash flow from operating activity, extremely good number. This shows that the company is cash rich company, and they can use this cash for any of their capex requirements. Extremely good numbers. Debtor days is around 74. Promoters are holding around 53%. FIs are holding around 11%. They have increased a bit compared to the last quarter. The DIs are reduced the stake from 12.36 to 10.94. Public is around 24.33. Overall, PG Plus fast growing company, and the prospects are pretty high. Okay, so this is not a recommendation, but this is just to explain that this is one of the fastest growing top 10 companies of India. The next company which we are looking at is KEI Industries, and if you see the company website, which is there into various wires and cables sector, and if you see the products and solution, they have high voltage cables, high voltage, low voltage cables, ESP cables. They have got control cables, house wires. Then they have single core, multi core, flexible cables, and communication cables. They have instrumentation cables, solar cables, rubber cables, and marine offshore cables, etc. Winding wires, stainless steel wires, etc. So this company is into cables and wires. So let us look at its fundamentals. Currently, it is a 41,000 crore market cap company. The price is around 4,560. Here also the stock P is very high, 70. So people should consider this as a very highly priced stock. Okay, the P is very high, 70. P is very high. So there is no recommendation to buy this stock at current level. It's extremely high priced. 27% is ROCE, 20% is ROE. So overall, the from that front, return on capital and return on equity, that is also it is passing the test. If you see the chart here, the KEI chart is continuously growing, and here the 23 it was 2510. So now it has gone up to 4536. It came down here, it slightly touched 5000 in between, but because of some strike at its factories, it came down to 4435. Again it is resumed this uptrend. However, there is high expectations which are built into this stock. All these 10 stock very high expectations built, so valuations are very expensive. So that is to be looked at before considering any purchase decision in these stocks. Company is almost debt free. It has delivered profit growth of 26.1% CAGR. It is expensive. It is trading as 13 time book. It's very expensive. And then if you see what are the competitors for KE Industries, Polycab is the biggest competitor. Then we have Finolex Cables, RR Kabel. These are the biggest competitors. Where the biggest competitor is Polycab, but there are other competitors also. However, if you see the sales growth is around 22%. On a quarterly basis, 2319 crores from March sales as compared to 2059 for December, and last March 1953 crores. Against that 2319 crores, very good top line growth. Profit, net profit, if you see here, 169 crores as against last March of 138 crores. So it's showing very good profit growth also. And then if you see the yearly sales, around 8100 crores for March 24 as against March 23 6900. So from that to 8100, it's going showing high growth. Operating profit also has gone up, and if you see the operating profit margin from 10%, it is remaining same at 10%. Then if you see the net profit from 477 to 561 crores. Okay, so that is showing very good. Then it is paying around 5% dividend payout, around 5%. If you see the compounded sales growth, 25% for last 3 years. Compounded profit growth 29% for last. Extremely impressive numbers. Balance sheet, if you see, the equity capital is around 18 crores of equity capital. And if you see here, cash flows from, what is the cash from operating activity? 611 crores cash flow. Very good number. It is cash rich company. That also, this can also use this cash for various capex requirement. Debtor days 68. Okay, manageable. And if you see the shareholding pattern, latest is 37% is by promoters, FI is 31%, very high FI holding. DI is around 16.3%, and public is holding on 15.6%. So KEI Industries, another company from the cables and wire segment, and this company also has very good prospects. So it's a high growth company. The next company which we are looking at is Kirloskar Pneumatic Company. The company is in the various industries such as oil and gas, pharmaceuticals, chemicals, food and beverage processing, steel, marine and fisheries, textile and automotive engineering. And what are the products? It's basically into air conditioning, refrigeration, air compressors, process gas systems and transmission. So in air conditioning and refrigerator, it is into reciprocating compressors, refrigeration systems, vapor absorption chillers. In air compressor, it is reciprocating air compressors, screw air compressors, centrifugal air compressors. In process gas, it is into CNG packages, gas compression systems. So this is the company Kirloskar Pneumatic. Let us understand what are the numbers looking at in market cap perspective. 8,630 crore market cap. It is quoting 1,332 at price. ROEC is 21%, ROE 16%. Good numbers. Face value is 2 and dividend is 0.48. So, and stock P is high, as I told you. All these companies are having very high stock P. If you see the chart, very interesting chart. See here, the company was showing it was moving at around 600 and 632. The high was around 733. Sudden jump because of March quarter numbers were double the profit. So March quarter very good. So if you see here, as soon as the results were March was announced, it just shot up. It just shot up, and if you see here, it touched 1400 here, and currently around 13. So what is led to this jump? And this is jump is a very important jump, and if it sustains these profits, then this company is very good. It has reduced debt, almost debt free. It has delivered a profit growth 20% and healthy dividend payout. It is expensive. What is the peer? Who are the competitors? LG Equipment is the one of the competitors which is having 24,000 market cap. Ingersoll Rand 14,900, and so basically the 24,000 crore. So in LG Equipment is the biggest its competitor that is also doing very well. LG Equipment, the sales is around 490 crores. Yeah. Now March quarter result, if you look at March quarter, very interesting numbers. 309 crores, 282, 242, 360 if you see here, and sudden jump to 490 crores in March quarter. So you see here the sales has suddenly jumped in the March quarter. It's extremely bullish signal. For operating profit, if you see the operating profit from 48 crores to 92, from 53 quarter on quarter to 92, very good numbers. Operating profit margin from 17 to 19%, that is also very good number. Profit before tax has grown to 81 crores, and if you see the net profit to 60 crores, and whereas last quarter it was 35 crores, last March it was 32, so it has almost doubled its profit. Extremely bullish sign. Sales for the year to 1,323 crores, and if you see the net profit 133 crores. If you see the sales growth around 17% last 3 years, compounded profit growth 30% in last 3 years, very good numbers. And the cash flow from operating activities extremely good number, 40 crores save x 183 crores. See the cash flow, if cash flow from operating activities has suddenly shot up to 183 crores, that is a very bullish sign. Debtor days around 103, that is fine. Promoters are holding 38%. FIs 1.7, very low, but this number can go up based on if the company shows profits, similar profits in future. So it's extremely high possibility of FI numbers going up here. DI is 32%. So overall, if you see this Kirloskar Pneumatic company is turned around, and March quarter results were fantastic, and of course the price also has gone up. So but it is expensive, so that also needs to be looked at. The next company which we are looking at is Tejas Networks, extremely high growth company. So they are into radio access network, broadband access, optical and data network, and network management. What are the services? Customer services, then we have build services, managed services, consultancy service, and nurture services. They have got various solution to broadband area, then utility communication, government networks, 5G, LAN, etc. Now let us understand what are the numbers here. 1409 is the price of Tejas Networks. 24,000 crore is the market cap, but ROC and ROE are pretty low, around 3% and 2%. However, the last quarter results were fantastic. So looking at that, if you see the share price also has gone up. It was quoting at around 656, and from there it has directly gone to 1400. So see the jump here, and that is because of March quarter results. So that is the reason why this jump, if you see in the stock price, March quarter results were fantastic. So company is expected to give good quarter. Its sales growth around 20% last 10 years. So it is trading at 27.66 times book value. So expensive valuation here also. What are the peers? ITI is one of the competitors, and then there are GTL Infra, etc. Smaller companies. But Tejas Network is high growth company here. P is very high. So looking at that, it's a very expensive company. March quarter, if you see, very interesting. 560 crores from December to 1,327 crores. See the massive jump here in profit. See the March numbers of last year, 299 crores. Now it is 1,327 crores. Extremely good numbers. Extremely good means it is just turned around. Then if you see the operating profit margin directly to 23% from negative 3%. Operating profit margin shoot up. It just shot up like crazy. Net profit 147 crores. Extremely good numbers. From loss to 147 crores. It's absolutely turned around. So 2,471 crores is the March numbers for annual number. 11% is the operating profit margin. We've shown a net profit around 63 crores. Very good numbers here. 67% is your compounded sales growth. The profit growth 19%. Very impressive numbers. Then if you see the cash flow from operating activities, still it is having a negative number here. So it is still way to go. It has just turned around. The ratios like debtor days is also very high, so that also needs to be improved upon. See, 55% is promoters holding, FI is 11%, 4.76 is DIS. There is a sufficient room for growth here, or increase in the DII percentage. So if you see the June quarter, I think this would have definitely gone up, and FI also would have gone up. So overall, Tejas Network is one of the highest growing companies of India. The next company which we are looking at is Vesuvius India Limited. Vesuvius India has got a steel division, the foundry division, then the steel flow control, steel advanced refractories. If you see, Vesuvius is a niche player here in the refractories business. In the Vesuvius advanced refractory business supplies to the steel industry and other process industries with high performance refractory material used for lining vessels such as blast furnaces, ladles and tundices to enable them to withstand high temperature and or corrosive attack. So basically they are into these refractory materials. So these refractory materials can withstand very high temperatures which are used in steel furnaces, blast furnaces. So basically steel industry it is catering to, largely to the steel industry. We have steel digital services, then the foundry divisions. So let us look at what are the numbers. Vesuvius currently is quoting at 5,386. That's the price on NSE. Market cap is around 10,933 crores. Fastest growing Indian company here. Stock P is very high, so this is an expensive valuation. Stock 26%, ROC very good. ROE is 19%, very good number. And if you see the chart here, the price chart, it is showing very good numbers for March quarter. It gave very good quarterly result where the sales growth was very high. So from 3,300 to now it is around 5,500. So see the growth in share price. It's an MNC company, debt free company. It has the sales have grown, the profits have grown. It's 18%. However, it is expensive. Who are the competitors? RHI Magnesita, which is 13,596 crore market cap. That's IFGL Refractory. So these are the competitors of Vesuvius India. Very well managed company. ROC very good. Sales growth is very good. Growth is very good. Now the interesting thing is how see the quarterly numbers. 453 crores were the sales, whereas last year was 368 crores. So it's a massive jump in sales here. Even quarter on quarter, if you see, the sales have jumped. And if you see the operating profit margin around 21% from 15%. So you have here operating profit margin also has increased to 21%. Net profit from 43 crores to 69 crores. Very good numbers. Quarter on quarter from 57 to 69. That's also very good number. So profit and loss for the year 1,639 crores are the annual, uh, and if you see the net profit around 238 crores. It has grown at 27% in the last 3 years. Compounded sales growth, profit growth is around 59%. Very good. So from that perspective, it has passed 20 crores is a equity capital, very low equity capital. Borrowings are very minimal, hardly anything. Cash from operating activities 82 crores. So that is also good for December quarter. Then what are the shareholding pattern? If you see the promoters holding 55%, FI just 1.57 because this is this stock FIS doesn't fall into the FIS criteria because from liquidity etc. 23% DI is a holding substantial quantity. of stock here. So this Withstood India is one of the another fastest growing Indian companies. The next company which we are looking at is Elecon Engineering. It's also one of the fastest growing Indian companies. What are the products? Their products are basically catering into power transmission, material handling equipment, and foundry division. It is catering to power transmission industry and material handling equipment industry. Let us see the numbers here for Elecon Engineering, how they are panning out. 1332 is your price here. Stock price 14,946 crores the market cap. Stock P is 42, it is little bit higher. ROC 31%, very good. ROE is 24%, very good. Dividend yield is 0.22, that is okay. And if you see the price chart, it has shown good appreciation in price, 809 as on 13th March to around 1300. So if you see here, the March quarter numbers were very good. And if you see the price action here, price has gone up. Company is almost debt free. There's a pros, and it has delivered a good profit growth. Cons is it is expensive valuation. For the competitive Elecon Engineering, it is at 14,900 crore market cap. Action Construction is one, and then you have Thermax 60,701 crores. Jupiter Ritagra are morely catering to the railway areas. So Raj Industries is there. So these are the competitors of Elecon Engineering, fast growing company. And if you see the quarterly results, 565 crore in March quarter compared to March 23 425. So extremely good growth here, showing year on year growth. Quarter on quarter also showing very good growth from December 23 474 crores to 565 crores. Very good numbers. If you see the operating profit margin around 24%, maintain the operating profit margins here. Net profit is 104 crores as compared to 68 crores. So it has shown a good growth year YOY as well as QOQ. EPS is around 9.24. So the quarterly results were fantastic. Profit and loss yearly 1,937 crores yearly sales, and then its net profit around 356 compared to that. If you see the last year 238, so there also it has shown good growth. Compounded sales growth 23%, compounded profit around 83%. Very good numbers, impressive. Equity capital around 22 crores. Cash flow from operating activities 365 crores of net cash flow. So it's a very good number here. It is cash positive. Then if you see the debtor days is around 84. Shareholding pattern, promoter holding around 59%. 7.56% is FI. So FI holding has gone up. DI holding is more or less steady here. Government nil and 32% to 30. So public holding has gone down. So basically the FI holding has gone up. For Elecon Engineering, very good stock, high growth, very good profitability, and the only thing is that it is at expensive valuation. It's currently quoting around 1300, right? In 3 months back it was just 8,844. So considering that, it is a highly expensive stock. The next stock that we are looking at is DOMS Industries. It is into stationaries, various stationery here. This is the website of the company. So which are the products? So products of pencil accessories, drawing, and coloring, mathematical drawing instrument, paper, stationery, pen, writing instrument, gifting, marker pens, crafts, fine art, etc. So if you see the what are the brands here? So the domestic brand is a DOMS is the biggest flagship brand, and then there is a C3 brand here. Then there is different brands. We go through the website of it, and now let us go see the actual numbers here. The DOMS is currently quoting at around 2000 on NSE. Market cap is 12,000 crores. Then your stock P is very high. Expensive valuation again here. ROC 30%, extremely impressive. ROE is 26%, very good. And then it has shown a high of 2134, which is 52 weeks high. Face value is 10. See the chart here. It was quoting at around 1400 in March, and currently it is at 2000. So considering that, if you see last 3 months also, it has gone up due to very good numbers, expectations of high growth here. Then what are the peer competition? DOMS Industries 12,200 crores. Navneet Education is one of the Flair Writing. These are all but major competitors. But overall, this is the market leader here in this case. Quarterly results. See the numbers here. 404 crores. Quarter result. QOQ it has shown a good number. And YOY 336 to 404, very good numbers. Net profit 47 crores, very good, from 36 YOY. That is shown very good numbers here. Operating profit margin also here, see if here 19% is maintaining that. This quarter is going to be good quarter because March to June quarter is very nice, very highly sales growth quarter. Sales 1537 for March, and tax and then 160 crores was is the net profit. It is 3 years compounded sales growth 56%, very good number. 191% is the profit, extremely good numbers. And see the cash flow from operating activities, and it is 183 cash from operations, very good number here. Debtor days around 15 days, that is nice. FIs are holding around March 7, FIs holding 5.86%, so there is room for growth here. FIs this can go up 15.86, DI 16.63. So overall DOMS industry is a good high sales growth company, very good fast growing Indian company here. The next company which we are looking at is Ethos. It is into high range watches and boutiques. They have a tie up with various brands, Rolex, Alpina, etc. And then they have got different watches at various price points, 0 to 50,000, 50,000 to 1 lakh, so all the way going to 4.5 lakhs. So this is catering to the high net worth segment. Ethos, and they are also into say jewelry, which is they are into where they have tied up with some international brands here. Accessories also, if you see here, different watch straps, watch, so they are into watches, jewelry, etc. But they are catering to very high net worth, if affluent segment of India. Let us see the numbers here. 2782 is the price here. 6800 crore is the market cap. Low, very low market cap, very high room for growth. 81 is the stock P. Again, I'm saying this is a highly priced stock. ROC 14, ROE 11%. Good, okay. Then if you see the price chart, it was quoting at in the March, it was quoting at 2600, not much grown much, 2783. However, if you see the last 1 year, last June, it was at around 1486. So accordingly, it is the price has gone up. The companies have good profit growth, 44% CAGR. It's an expensive valuation stock here. Again, the same thing. And if you see the peers, direct peer, if you here you won't find, because this is into purely into watches and jewelry, etc. Where these others are into say footwear, red tape, Trend is into apparel, etc. So this Ethos is into high value watches. Sales 253 crores, and if you see the last year, 208 to 253 crores, very good number here. Operating profit margin 14%, good number here. Net profit 21 crores here. Then profit and loss, if you see the yearly full year, 999 crores profit as against 789 crore last year, very good growth here. 25% tax, 83 crores is the profit, whereas 60 crores last year, 23 crores year before that, and only 5 crores in 2021. See the growth here from 387 crores sales growth to 999, and profit from 5 to 83. So this shows very good high profitability here. 37% is the 3 years CAGR sales growth. 3 years profit is 160%, very good numbers. Then cash flow from operating activities 31 crores, okay. And if you see the debtor days around 6, which is very low. Promoters are holding 55%, so promoter holding gone down as compared to December quarter from 10.41 to 11.28. So FI holding has gone up a bit. DI 12 to 13, DI holding also has gone up little bit. So overall, Ethos is into high-end watches and jewelry segment, catering to very high net worth individuals and showing very good profitability. So these are the India's top 10 high growth companies to look at. The more the look at it, the you can understand their business model, how they are able to grow consistently quarter over quarter. And these companies are expected to show good growth in future. So price can be monitored, and this is not a any recommendation to purchase stock of these prices, because the stock price are extremely highly valued, very expensive valuations. So these are not the right levels to enter any of these stocks here. This is only to understand what are the fastest growing 10 Indian companies. Thank you very much.